The committee will come to order.
Hey, Dave. I missed the meeting, but I agree with you.
That's why you're a great American. We meet today in our first hearing of the 112th Congress to begin what I expect will be a long discussion, and one that I hope will be bipartisan on the need to reform our federal income tax system. As I did on Tuesday, I again want to extend my appreciation to Ranking Member Levin for agreeing to allow this hearing to move forward today, even though the committee did not officially organize until 2 days ago. 25 years ago, a Democrat House and a Republican Senate sent to the White House, and the President signed a landmark legislation known today as the 1986 Act. This is where we started in 1913. This is the entire tax code of the United States of America and all the regulations. This pamphlet. This is where we are today. This is the tax code and all of the regulations that Americans have to deal with today. The law in '86, which marked the successful culmination of years of work, broadened the tax base and lowered tax rates, and it remains the basis of our system of taxation. But in some sense, it's a shell of its former self. In the intervening years, members of Congress from both sides of the aisle have loaded the tax code with a dizzying array of credits, deductions, exclusions, and exemptions. The late economist David Bradford once provided a tongue-in-cheek example to illustrate the concept of tax expenditures and why they're little more than disguised spending. Bradford proposed to cut the defense budget for weapons procurement to zero, while creating a new weapons supply tax credit that could be claimed by defense contractors for appropriate weapons donated to the Pentagon. And under this regime, it would appear to the untrained eye that both spending and taxes would be reduced, thus allowing elected officials to claim the government was smaller. But in reality, nothing would have changed. A spending program would still exist. It would just be cleverly disguised as a tax credit. Bradford's cautionary tale seems all too real to those who've passed the tax code and its mysterious tax expenditures for congressionally blessed industries and activities both big and small. And regardless of the merits of any individual tax expenditure, the broader picture is not a pretty one. The President's Deficit Commission, which I served on along with the gentleman from Wisconsin, Mr. Ryan, and the gentleman from California, Mr. Becerra, measured the impact of these expenditures in terms of higher tax rates. The Bowles-Simpson report makes clear that taxpayers foot the bill for those expenditures in the form of higher tax rates. The Bowles-Simpson report called for eliminating all tax expenditures and would have moved individual rates to 8%, 14%, and 23%, and dropped the corporate rate to just 26%. And if their plan used all of the higher revenue from eliminating tax expenditures to push down rates, those numbers would have been even lower. And as we'll hear from Nina Olson, the taxpayer advocate, the impact of the changes to the tax code to create, expand, and extend these expenditures can be measured by the tens of thousands of additional pages added to the code, or the thousands of changes enacted in the last decade alone. Clearly, the tax code is too complex, it's too costly, takes too much time to comply with, and all of this adds more burdens on our families, on employers, making it more difficult to create jobs in this country. And I'm under no illusion that the task before us will be easy. To really reform the tax code in a way that lowers the tax rate, broadens the base, and promotes the competitiveness of American employers, we will need to make some tough choices. And I don't think this can be or should be a partisan exercise, and it can't just happen because one chamber passes a bill. It will require the active participation of all members of this committee, and it will require us to work with the administration. And yes, we'll even have to talk to the Senate now and again. But more importantly, we will talk to the American people, individuals, families, employers large and small, who are actually impacted by the laws we pass here in Washington. So this is just the first hearing of many. I've asked our witnesses to confine their remarks at this first hearing to defining the problems of the current tax system. I look forward to hearing from many other witnesses and working with all of you as we undertake this enormous challenge. And as we do so, we'll have many further opportunities to consider various solutions. But today our focus should be on making sure we begin to understand the scope of the challenge. And with that, I yield to my friend and ranking member, Mr. Levin.
Thank you, Mr. Chairman. We welcome this opportunity. Clearly, there is a need for tax reform. Clearly, any tax reform, as was true in 1986, will have to be bipartisan. It will have to be bicameral, and also it will require leadership from the executive, which I am sure will be forthcoming. In a way, this hearing is a pickup of an effort some years ago. Next to me, Mr. Rangel was chairing the committee, introduced legislation to try to move ahead this issue of tax reform. I'm not going to be here for a bit because I think Kevin Brady and I will be going to meet with President Hu of China. I hope this hearing will indeed move the ball forward, though let's not expect any touchdowns. It's a long way from the goal line. I do think we need to keep in mind some basic principles, including the need for our tax system to help create jobs, to help promote economic growth. I also think, and this may be somewhat controversial and difficult, that also we need to make sure that reform is fiscally responsible. Another principle that we need to keep in mind is that any tax reform has to benefit the working families of America. Also, let's keep in mind that the code is complex. Answering it through tax reform will not be easy. Mr. Chairman, you have referred to the testimony of the National Taxpayer Advocate who's here with us, and I join in welcoming all of you. And as we looked at the materials last night of all of your testimony, which I'm glad we received in time to review, on page 10, Ms. Olson, you list the tax expenditures under the caption on page 9, the dirty little secret, tax breaks generally benefit the masses. That's your language. And I just urge that everybody go through the list on page 10 to understand why some have advocated their being there, the breadth of their coverage, and the need for us on a responsible bipartisan basis to have, as you have said, Mr. Chairman, an intelligent, forthright discussion as to each and every one of them. So this is the kickoff. The field will not be easy. There may be snow, rain. We're used to that in Michigan on fields. But I think we need to pursue this, and we Democrats look forward to our working together to tackle this issue. Thank you, Mr. Chair.
Thank you very much. Today we're joined by 5 witnesses. Our first witness will be the Honorable Nina Olson, the National Taxpayer Advocate, and we welcome you back to the committee. After her, we will hear from Bob McDonald. Mr. McDonald is the Chief Executive Officer of Procter & Gamble and is testifying today in his capacity as the Chairman of the Business Roundtable's Fiscal Policy Initiative. I should note that Mr. McDonald will need to leave promptly at 11 a.m., but I think given the schedule of votes that we're going to have today, I don't think that will be an issue. Our third witness will be Warren Hudak, who is the president of Hudak & Company, a small business that provides tax services to other small businesses. And fourth, we'll hear from Dr. Kevin Hassett, a senior fellow and director of economic policy studies at the American Enterprise Institute. And last, we will hear from Dr. Martin Sullivan, a contributing editor for tax analysts. We welcome all of you, and we look forward to hearing your testimony. Before recognizing our first witness, let me just note that our time this morning is limited. So I will not be asking questions today, and with the concurrence of the ranking member, questions by members will be limited to 3 minutes in the hope of giving more members the opportunity to be recognized. But each of the witnesses will have 5 minutes. So, Ms. Olson, your written statement, like those of all the witnesses, will be made part of the record, and you are recognized for 5 minutes. Welcome and good morning.
Thank you, Chairman Camp, Ranking Member Levin, and distinguished members of the committee. Thank you for inviting me to testify today about the subject of tax reform. Let me begin by saying bluntly that, in my view, the tax code today is a mess. Since the last major reform 25 years ago, the code has become an ever-expanding patchwork of provisions with little logical connection, and it has become unreasonably difficult for taxpayers to understand and comply with. In my 2010 annual report to Congress, I identified the complexity of the tax code and the confusion and distrust it engenders as the #1 most serious problem facing taxpayers and the IRS. I titled that section, "The Time for Tax Reform is Now," because while there has been a lot of talk of tax reform in recent years, experience has shown that it will require a sustained, bipartisan effort with the support of an engaged public to make tax reform a reality. I start by noting that the tax code as it stands today imposes excessive compliance burdens on individual taxpayers and businesses. It is rife with complexity and special tax breaks, helping taxpayers who can afford expensive tax advice and discriminating against those who cannot. The complexity obscures understanding and creates a sense of distance between taxpayers and the government, undermining taxpayer morale and leading to lower levels of voluntary compliance. The complexity of the tax code is also burdensome for the IRS, making it more difficult for the agency to meet taxpayer needs and probably resulting in more audits and enforcement actions than a simpler code would require. Now, despite the existence of many narrow special interest tax breaks, it is important to recognize that the overwhelming majority of tax breaks by dollar value accrue to large segments of the tax-paying public. In short, we are the special interests. If tax rates are to be lowered substantially and overall tax liabilities on average are to remain unchanged, virtually every taxpayer will have to give up cherished tax breaks. There is simply no free lunch. Yet I am convinced that what I call the busy majority of taxpayers wants fundamental tax simplification and will support it. Lower tax rates will offset the loss of tax breaks, and at the same time, taxpayers will understand how their taxes are computed and will save time and money on return preparation. To assist Congress in deciding which tax breaks and IRS-administered social programs to retain and which to eliminate, I suggest utilizing a zero-based budgeting approach. Under that methodology, the starting point for discussion would be a tax code without exclusions or reductions in income or tax. A tax break or IRS-administered social program would be added only if lawmakers, you, decide on balance that the public policy benefits of running the provision or program through the tax code outweigh the tax complexity challenges that doing so creates for taxpayers and the IRS. In my view, tax reform will have a better chance to succeed if it proceeds on a revenue-neutral basis. Although there is widespread recognition that we ultimately must take steps to reduce our current deficit levels, I am concerned that if we attempt to solve those issues through tax reform, we may never achieve structural tax reform. Rather, we are likely to get stuck in partisan debates precisely when we need a calm and civil analysis of the structure of the tax code. For all these reasons, I believe that fundamental reform must be made a priority. A simpler, more transparent tax code will substantially reduce the estimated 6.1 billion hours and $163 billion that taxpayers spend on return preparation. It will increase the likelihood that taxpayers will claim all benefits to which they are entitled. It will reduce the likelihood that sophisticated taxpayers can exploit arcane provisions to avoid paying their fair share of tax. It will enable taxpayers to understand how their tax liabilities are computed and prepare their own tax returns. improve taxpayer morale and tax compliance, and perhaps even the level of connection that taxpayers feel with the government. And it will enable the IRS to administer the tax system more effectively and better meet taxpayer needs. I am confident that in the end, public support for a simpler code will be strong and deep. Thank you.
Thank you very much. Mr. McDonald, your written statement is also part of the record, and you have 5 minutes. Thank you very much. Your microphone, you have to push a button. Thank you.
Chairman Camp, Ranking Member Levin, and distinguished members of the committee. My name is Bob McDonald, and I am the Chairman, President, and Chief Executive Officer of the Procter & Gamble Company. I'm here today in my capacity as Chairman of the Business Roundtable's Fiscal Policy Initiative. I appreciate the opportunity to discuss the importance of corporate tax reform to competitiveness, U.S. investment, and U.S. job growth. The world has changed dramatically since the basic operating rules of our international tax system were adopted. The spread of free markets around the world has opened up new opportunities for America's businesses and workers to sell their products to the 95% of the world's population that live outside the United States. At the same time, American companies and workers face heightened competition from foreign competitors as they seek out these new markets. The time in which multinational corporation was synonymous with American corporation has long passed. As just one example, in 1960, the largest worldwide companies were nearly all American companies. U.S. headquartered companies comprised 17 of the world's largest 20 companies. By 1985, there were only 13. And by 2010, just 6 U.S. headquartered companies rank among the top 20. In this hyper-competitive environment, many factors can disadvantage American companies and cause them to lose out in this competition, to the detriment of the U.S. economy and American workers. Taxes are a very important factor. American companies seeking to expand in markets at home and abroad are working with one of the least competitive tax systems in the world. Let me explain why. As this slide shows, the United States has the second highest corporate tax rate among advanced economies. After Japan adopts its proposed 5 percentage point corporate rate reduction this spring, the U.S. will have the highest corporate tax rate in the OECD, 14 percentage points above the average. This next slide shows that it was not always the case that the U.S. tax system was so uncompetitive. In 1986, when the last major tax reform was undertaken, the U.S. went from among the highest corporate tax rates to among the lowest. But since that time, the tax systems of the rest of the world have caught up and surpassed us. As this next slide shows, the United States is also one of the few remaining advanced economies that taxes its companies on foreign earnings from active business operations when remitted home. Most other OECD countries have adopted territorial tax systems that largely exempt these active earnings from home country taxation. Recently, both Japan and the United Kingdom have switched to territorial tax systems. They have chosen these territorial systems to improve the competitiveness of their businesses and their economies. This tilted playing field created by the U.S. tax system hurts the competitiveness of American companies and American workers. First, diminished sales around the world directly reduce U.S. exports of goods and services along with investments and jobs in the United States. Second, high taxes imposed on American companies that bring foreign earnings back to the United States discourage use of these funds to expand U.S. operations. Third, a high U.S. corporate tax rate on domestic profits discourages investment here in America by both U.S.-based and foreign-based companies. And fourth, the highest price paid is paid by the American worker in the form of lower wages and a more slowly growing economy. On behalf of the Business Roundtable, I look forward to working closely with this committee, the Congress, and the administration on this incredibly important issue. Thank you, Chairman Camp.
Thank you very much, Mr. McDonald. Mr. Hudak, you also have 5 minutes, and your written statement will be part of the record.
Good morning, Chairman Camp, Ranking Member Levin, and members of the committee. I'm pleased to be here as a small business owner and as a tax professional assisting small businesses. My business, Hudak & Company, provides a full range of tax services for small businesses, so I know firsthand the challenges that my clients and our company face in complying with the tax code. The complexity of the tax code are especially onerous on small businesses. They can't afford staffs, HR staffs, tax professionals on hand. They have to outsource all of that at a tremendous price. They spend about 1.9 billion hours every year to comply with the tax code, $19 billion in costs in complying with the tax code. It's a staggering amount of money. I'm also a member of NFIB that has 350,000 members, and we've recently surveyed our members, and two of the top priorities for small businesses is the federal tax code and its complexity. One thing to be very sure of that from a small business perspective, the business can't be separated from the owner. Most small businesses are structured as a company. The earnings are taxed at the individual company rate. They select this for simplification. It's a simplified way of being able to understand their taxes. The best example I can give in understanding the small business is two examples from this year. We had two companies that were getting ready to retire. They counted on their business to be their retirement plan. They were regular corporations, and in order to avoid the double taxation of the C Corp, they switched to an S Corporation. But because of the onerous 10-year capital gain, built-in capital gain provision, they actually lost 50% of all of their earnings that they worked their whole life for. 18 hours a day, some of these business second generations, and losing that kind of money was staggering. Prevented them from investing in other businesses, starting a new venture, pursuing a new idea. And for one owner, it meant that he had to continue working into retirement. So we all struggle with the tax code. To speak to the complexity of the tax code, the IRS just recently sent out a postcard to all small business owners saying they were no longer going to accept payroll taxes to be remitted using a paper voucher. They were no longer allowing them to submit that. And some of my most sophisticated clients, who've been clients for a long period of time, email me and say, what have we been doing wrong? Why did I get this notice? They didn't understand the very nature of the notice. What was even more mind-blowing for me was the fact that we've always submitted their taxes electronically. For 8, 9 years, we've been submitting their taxes electronically. They get a simple postcard in the mail saying, we will no longer accept paper vouchers, and they're panicked. What are we doing wrong? What's going on? They didn't understand the very fact that we were already doing it electronically. And that is a very simple example of the misunderstanding about what's actually going on. My clients, as hard as we try to get them to understand the tax code. This leads to terrible compliance problems. The tax code definitely has to be simplified. Thank you.
Well, thank you very much. Dr. Hassett, you also have 5 minutes, and your written statement will be part of the record. Welcome.
Thank you very much, Chairman Camp. Ranking Member 11 is not here, so perhaps Mr. Rangel is the highest ranking. But thank you so much for having me here. It's a real pleasure and honor to be here and to talk to you about this important topic. The first part of my testimony discusses recent research by Carmen and Vincent Reinhardt that looks at the long-run economic impact of a financial crisis. They find that one can expect to have slower growth for a good long period after a financial crisis, perhaps as long as a decade. And if we have the typical experience of an economy after a severe financial crisis, then we'll grow about 1% a year slower over the next 8 years, and the unemployment rate 8 years from now will be about 8%. This is an unacceptable outcome to everyone, but I noted at the outset of my testimony that this is a medium-term problem, and a short-term stimulus is of little use more fundamental changes must be considered, which is why I celebrate this hearing. The first part of my testimony talks about the complexity of the tax code and provides a chart of the marginal tax rates under the current system that account for all of the phase-outs for all of the different targeted tax policies that we have, and shows that the marginal tax rate, as we go up with income, goes up and down sort of like a city skyline. Now, progressives generally favor tax rates that increase with incomes, and others favor rates that are flat across incomes, and I don't think anybody thinks that the marginal tax rate schedule should look like a city skyline, but that's what we have. This is really logically indefensible, and a reason why fundamental tax reform could have a very large impact. Now, a sound reform should not only fix the rates, but also should reform the definition of the tax base as well, and if we do this, we can accomplish a lot. A well-designed reform could easily produce significant growth effects. Just to sketch the terrain, a survey of 69 public finance economists conducted by Victor Fuchs, Alan Kruger, and James Paterba in 1998 found that at the median, respondents believed that the 1986 tax reform produced about 1 percentage point higher growth over a long period. My review of the literature with Alan Auerbach suggested that this is a consensus that's a fair reading of the broader tax reform literature. Now, there are many possible reforms that would broaden or modify the base, but the key point is that they can conceivably have effects that are just about big enough to offset the growth shortfall that we've inherited because of the financial crisis. In the first part of my testimony, I make these points, but then I move on to look specifically at the case of the corporate tax. While there's a broad consensus that the high statutory corporate tax in the U.S. makes investments in the U.S. uncompetitive relative to other OECD economies, some question the extent to which effective taxes paid by corporations are equally high. As there'll be much discussion of these factors in coming months, the remainder of my testimony looks specifically at the question of effective rates. I begin with the statutory rate analysis that's very similar to what you've just seen. The statutory rate, though, is an imperfect measure of tax competitiveness because it does not take into account the breadth of the tax base. This causes countries with high rates and a narrow base, such as the United States, perhaps to appear more uncompetitive than they really are. Effective tax rates resolve this issue by taking into account offsets, the present value of depreciations, and other deductions that narrow the base. There are two measures of effective rate that are really the industry standard. The effective average tax rate, which you could think of as being the rate that affects something like a plant location decision, and the effective marginal rate, which affects decisions like, should I buy a new machine for the plant that's already there? Now, in a forthcoming study that I've done with my colleague at AEI, Aparna Mathur, we looked at national rankings of statutory rates and of these effective rates. Our analysis finds that the United States' performance in the global economy does not look much better when scored with effective rates than when scored with top statutory rates. In 2010, for example, the U.S. effective average rate, which is again the rate that is marginal when you're trying to locate a plant somewhere, was 29%, while the average for all OECD economies was 20.5%. This is the second highest effective average rate in the OECD. The United States compares slightly more favorably to other OECD countries when we look at the effective marginal rate, which is the rate that influences the decision to buy a machine. Even with the effective marginal rate, however, we're not doing so well. In 2010, the U.S. effective marginal tax rate was 23.6% relative to the non-U.S. OECD average of 17.2%. This was the fifth highest in the OECD. Any discussion of tax rates is incomplete without analysis of trends in corporate tax revenues. With one of the highest corporate tax rates in the world, one might expect the share of revenues from corporate capital to be higher in the U.S. than other OECD economies, but this is not the case. In fact, in the U.S., our revenue is lower than the OECD average. This pattern is consistent with the literature that explores the responses of tax revenue to changes in the corporate rate. Alex Brill and I found significant evidence that a reduction of the corporate tax rate in the U.S. would increase corporate tax revenue by looking at the changes in revenue in response to other nations' reductions in corporate rates. There's a large literature that generally finds a Laffer curve in the corporate tax space. Given the significant headwinds that the economy faces, the indefensible state of the current code, and the horrifyingly high U.S. corporate tax rate, I'm glad we're considering reform at this moment. Thank you.
Thank you very much. Thank you, Dr. Hassett. Dr. Sullivan, you also have 5 minutes, and your testimony will also be part of the record, your written testimony. Thank you. Welcome.
Thank you. Mr. Chairman, members of the committee, thank you for this opportunity to testify. A quarter of a century ago, President Reagan defied all the skeptics and provided the leadership for a bipartisan overhaul of the tax system. He lowered the tax rates, he cut the tax breaks. It was a victory for the public over the special interests. 25 years later, the need for tax reform is greater than ever. Tax complexity costs businesses billions, families endure endless hours of anxiety and paperwork, and the perception of unfairness, whether it's due to outright cheating by investors hiding funds in Caribbean havens or to special interests who lobby their way to lower taxes, is an insult to Americans paying their fair share. On top of all this, our tax code is dead weight on the shoulders of the American economy. The tax code's long list of subsidies defies any notion of a free market. My focus today will be on the corporation tax, which is in particular need of reform. As we just heard, Japan has announced its intention to cut its corporate rate by 5 percentage points. This leaves the United States with the dubious distinction of having the highest corporate tax rate in the world. Cutting the corporate tax rate is no longer just a good idea, it's an absolute necessity. At the same time, we must recognize our dire budget problems. We are on the road to fiscal catastrophe. And so far, Congress has done nothing to remedy the problem. To put the nation's finances on a sustainable path, that is, just to get our debt to GDP level to stabilize, far, far away from balancing the budget, that will require annual deficit reduction of $500 billion a year. In this environment, with these unprecedented budget pressures, it seems reasonable to assume necessary corporate tax cuts must be accompanied by corporate base broadening. Mr. Chairman, a fundamental feature of U.S. international tax law is that it favors foreign job creation over domestic job creation. If an American corporation opens a factory in Indiana, it pays a 35% tax rate. If the same corporation opens a factory in Ireland, it pays a 12.5% tax rate. Let's say the factory generates $100 of profit. The choice is between after-tax profit of $65 in the United States or $87.50 in Ireland. Obviously, the U.S. tax law provides a strong incentive for building factories in low-tax countries. Now, it is essential at this point to discuss transfer pricing. It should be front and center of any discussion of a corporate tax reform. Transfer pricing is not a detail. Data from a variety of sources indicate inappropriate profit shifting occurring on a large scale. What I'd particularly like to bring to the committee's attention is that over the last decade, the transfer pricing problem has gone from bad to worse. When you work out the math, what you discover is that transfer pricing is not just a revenue problem, which could be $30, $40, $50 billion a year, but it's also a job creation problem. The effective tax rate for a typical investment in Ireland is not just 12.5%, it is actually negative. This means that the U.S. Treasury Department is subsidizing investment in Ireland. It is no different than, say, the Commerce Department directly sending checks to companies. This is corporate welfare available only to businesses investing abroad. So, irrespective of one's views about whether the United States should move to a territorial system, we should all be able to agree that the inefficiency of subsidies provided through aggressive transfer pricing is a drag on economic growth and job creation, and that any tax reform should include strong measures to reduce inappropriate profit shifting. Multinationals' record on domestic job creation is not good, as indicated on the screen. Between 1999 and 2008, they reduced domestic employment by 1.9 million jobs, and at the same time increased foreign employment by 2.4 million. In conclusion, let me just say this. The essence of an efficient and competitive tax system is a level playing field. Government should not attempt to outguess the market and pick winners and losers. As you can see from this slide, our corporate tax code has created winners and losers. The winners are those companies that are able to locate profits in offshore tax havens. The losers are companies that do not have that opportunity. Of course, multinational corporations are important to the U.S. economy. They are research intensive, they are export intensive, and America wants strong multinationals. But multinationals' competitiveness and overall competitiveness are not the same things. Yes, U.S. multinationals create jobs, but so do purely domestic companies, so do small businesses, and so do foreign headquartered companies in the United States. Thank you, Mr. Chairman.
Thank you. Thank you very much, Dr. Sullivan. Thank you to our entire panel. And now we'll go to questions. And the chair recognizes Mr. Rangel for the opportunity to question.
Thank you, Mr. Chairman. Richie Neal and I would attempt to fill the absence of our ranking member. But I think it's generally agreed with this panel that as relates to corporate taxes, if we were to exclude the credits, the deductions, the exemptions, as Dr. Sullivan referred to, we could have a dramatic decrease in the corporate tax rate. But everybody wants to cut the loophole for the other guy, but not the incentive that he or she or the corporation enjoys. Dr. Sullivan, in your dealing with the corporate world, do you find any tremendous objection to starting with ground zero in terms of the loopholes that we have in the corporate system so that we can more easily, dramatically reduce the statutory rate for corporations?
Just as Chairman Camp was saying, we should think of tax expenditures just like direct expenditures. And we need to go through our tax expenditures with a fine-tooth comb and look for abuse and inefficiency. And I think, as we say on the direct spending side, everything should be on the table. And I think we would find, when you start picking through the details, you'll see that most of the tax breaks in our code could be trimmed and made much more efficient.
So what you're saying is there's no big target out there. If we were talking about individual tax rates and start talking about mortgage deductions and charitable contributions and local and state deductions, that's the big mountain that we would have to climb. In the corporate area, however, what would be our biggest obstacle, in your opinion, if we started off with no exemptions at all? What would we have to overcome politically in order to do that?
Well, we would have to eliminate the tax incentives for offshore job creation that is intrinsic in our international tax rules.
So you don't think that our corporate leaders would not think that it would be competitive if we reduced the rate, and then they can decide where to make the investment and remove the subsidy for encouraging investment abroad?
Well, I think it depends which corporate leader you're speaking to, because some corporations under current law do not have opportunity. Frankly, they don't have a lot of tax breaks available to them, while others do. And so the companies that do not have those tax breaks available to them are going to be much more in favor of lowering the rates across the board.
Thank you. I yield back.
Thank you very much. And now the chair recognizes Mr. Herger for 3 minutes.
Thank you, and I'd like to thank the chairman for this very important hearing. There are a number of reasons for Congress to seriously consider tax reform, but I'd like to focus on the impact on jobs. Mr. Hudak, you expressed concern about the expiring tax provisions and the uncertainty that creates. This is something that has long been a concern of mine as well. As someone from a small business background, I recognize that business owners have to plan for the future when they make investment decisions. Tax relief that lasts only 1 or 2 years isn't all that helpful when you're planning an investment that will pay off 5 or 10 years down the road. Could you elaborate further on how the uncertainty of temporary tax provisions affects some of the businesses to which you provide services?
Well, absolutely. The tax code causes business to think tactically instead of strategically. When provisions are temporary, or when provisions are put in place to incentivize, oftentimes we miss the mark because of their complexities. The Section 179 deduction, the AMT fix that we wait until the very last moment at the end of the year might be the difference between a $5,000 or $10,000 tax bill going into the next year. And that could mean the difference between a new truck, maybe an online marketing initiative, or maybe even a new employee. It has a direct impact, the temporary provisions and the last-minute uncertainty that we've been seeing increasingly over the last decade. It's very important that businesses think tactically or think strategically and not tactically. I had a situation where, for instance, we had a complicated provision that allowed people who bought a certain kind of truck, a certain size truck, was able to get a deduction. So he went out and talked to his other accountant and bought a truck. It was the wrong truck. It was a massive truck. He was hoping to grow into it. He was in a paper products company, and that truck became his warehouse. He used it to pick up his paper products, put it in the truck, and why bother unloading it? He just drove around with his warehouse in his back. So he was thinking tactically and not strategically, and the tax code does that continuously.
Thank you. Thank you, Mr. Chairman.
Thank you very much. Mr. Johnson is recognized.
Thank you, Mr. Chairman. Mr. McDonald, I'd like to have your comments. I think we've got IRS people in darn near every corporation now, and what they do is sit there and keep you out of trouble theoretically, and then turn around and come back at you when you make a mistake, which they're there to prevent theoretically. I think that's a waste of effort, frankly. I think you probably know that the IRS commissioner, Douglas Schulman, does not file his own taxes, in part because he believes the tax code is too complex. He says, and I'll quote him, "I've used a tax preparer for years. I find it convenient. I find the tax code complex, so I use a preparer," he said. That means to me that the average American can't fathom this tax code, and we need to do something to fix it. But basically, I want to thank you for being here and ask you to what extent has our corporate tax system adversely affected investment and job creation in America?
Well, Congressman Johnson, the issue as we've talked is that the corporate tax rate of the United States, both the rate itself being soon to be the highest in the world, as well as the worldwide system, disadvantages American corporations. In the case of the Procter & Gamble company, the company I'm the CEO of, most of our competition is international competition. And on average, we pay about 2 percentage points higher corporate tax than those international competitors. Plus, we face a higher tax rate if we repatriate money that we earn overseas. That is a disincentive for any company to invest in the United States. Now, in our case, because we are a global company and because we can't export our product, we can't make a disposable diaper in Mahoopany, Pennsylvania, and ship it to China and make any money on it. We do have an organization around the world, and we do have 150 plants around the world. So for us, there's never really a decision as a company that we invest either here or there. We have to invest everywhere in order to sell to the 4 billion people we reach every single day with our products.
Yeah, does that make you think that some of the corporate structure might move overseas just to get out from under our tax code?
Certainly, it could be possible. What we're attempting to do is provide a competitive system for this country so that businesses stay here and flourish here the way they have for years.
Thank you. Thank
All
you,
right.
Mr. Chairman.
Thank you. Thank you very much. Mr. Stark is recognized.
Mr. Chairman, I'd like to yield to Mr. Neal, if I may.
All right. Mr. Neal.
Thank you, Mr. Chairman. Thanks for holding this hearing. Thanks to Mr. Stark. A couple of questions that I'd like to direct to the panelists, because this is complicated work. And oftentimes in this town, it's reduced to jargon, as you know. And I think there are reasonable arguments. I've been to that Gillette plant with Mr. McDonald in Boston. It's a remarkable story about domestic manufacturing. And perhaps you can let us in on how many blades are going to be added during the Super Bowl to that razor. I know that's a closely held secret, but is it possible, Mr. McDonald, to focus on growth and keep the initiative revenue neutral?
Congressman Neal, it's a great question. We believe it's best to take a look at getting a competitive system first. Many of our CFOs had meetings with Secretary Geithner last week, and revenue neutrality, we asked to take that off the table for now, and let's just agree that what we want to do is to do something that's fiscally responsible, the way the chairman and I think the ranking member talked about it. And I think if we work together, we can develop a competitive tax system for this country and do it in a fiscally responsible way, and that's what we're setting out to do.
When Mr. Rangel kicked out his proposal, if you recall, the critics jumped on it. It was a starting point in the conversation. That's all it was. It was an opportunity to shed some light on the needless complexity of the current code. Now, let me use an example of how I think we got burned here. A few years back, the former chairman of the committee argued for repatriation. And right now, American companies are estimated to be sitting on more than $1.3 billion worth of revenue offshore. But recall that that money was repatriated at 5.25%, and there were no jobs created. In fact, in one instance, one company laid off, I believe, 6,000 people in the next few weeks after the money had been repatriated. So I share the argument that getting that money back for job creation is a good idea, but what assurance would we have that as the money was returned, that in fact domestic job creation would occur?
Well, I think if we start with the premise that we have an uncompetitive system, we set up that competitive system, that will lead to economic growth, that will lead to business growth, and that will lead to job creation. So as a business roundtable, we've encouraged our members to not look for a one-time repatriation, but rather to work on, with us, the getting a competitive rate, going to a territorial system so that we can grow the economy and create jobs in this country. Obviously, if we are in a territorial system, the repatriation takes care of itself and we create jobs here.
Okay. How many people wake up every morning and use a Gillette razor?
Not enough.
Okay.
With that answer, the gentleman's time has expired.
Mr. Camp?
Yes.
I believe Mr. Stark yielded the time to me.
Yes.
Would you allow me to pursue the next 3 minutes that I have along the same line?
Well, it's now time to go to the other side of the dais, but then we'll come back to you. So Mr. Nunes is recognized for 3 minutes.
Thank you, Mr. Chairman. I'll be very brief. I want to thank the panelists for coming, but I want to just take this time, Mr. Chairman, to encourage you to move forward with fundamental tax reform. I think that last year, President Obama's commission really undermined the debt commission that you served on and some of the members of the committee served on, but really it undermines the power of this committee and undermines our constitutional duties that we have in this committee. So I hope that you will work with Chairman Levin and in a bipartisan manner, and that we can move real tax reform legislation through this House this year. I think it would be great if we could do it in a bipartisan way. I yield back.
All right, Mr. Teaberry is recognized.
Thank you, Mr. Chairman. Thank you all for coming. Mr. McDonald, kind of following along what Mr. Neal was talking about, I'm from Columbus, Ohio, and during the last campaign season in Columbus, and I'm sure in Cincinnati, well, we saw a lot of ads regarding trade and regarding taxes and regarding incentives. And in fact, in the governor's race, which was all about jobs, we saw the current governor attacked for a vote or votes in Congress that he voted for tax breaks to send jobs, American jobs, overseas. And most of that was targeted for American worldwide companies who were expanding into different markets. Obviously, Procter & Gamble has a huge presence overseas. Can you tell me what those tax breaks are that send jobs overseas in your mind?
Well, Congressman Teaberry, as I said, we invest everywhere. Our investment decisions are not we invest here or there. And in fact, our international business is about 60% of our total sales. Our U.S. business is about 40% of our total sales, yet we pay 60% of our taxes in the United States. We're one of the largest taxpayers here in the United States. What's important is as we grow overseas, that creates jobs in the United States. 20% of our jobs in the United States depend upon our international business. 40% of our jobs in Ohio depend upon our international business. So even though we may be the largest consumer goods company in China with 7,000 Chinese employees, we've got a lot of people in Columbus, Ohio and in Cincinnati, Ohio who depend upon the strength of that business for their jobs. And we take that very, very seriously.
Is it fair to say then, and others have said this to me, CFOs and tax accountants, that if we aren't proactive here in the United States with respect to tax policy and competitiveness, even though Procter & Gamble, for instance, has been in Ohio for over 100 years, you don't have to be headquartered in Ohio or the United States, and other countries would love to have you. Is that a fair statement?
I think the chart I showed earlier that showed how statutory tax rates have gone down over time is suggestive of the fact that countries around the world are competing for investment, and they're competing for companies like ours to move outside of their home country. We've got to get into that game, and we've got to be competitive, and we've got to get people to invest here in the United States.
And ultimately, the more diapers that you sell in China or the more toothpaste you sell in Europe is going to mean more jobs in Ohio.
Yes, sir. More jobs in Ohio.
Thank you.
All right. Thank you. Mr. Neal is recognized.
Thank you, Mr. Chairman. I want to come back to a point that I was raising earlier. Dr. Sullivan, I was caught by the statement that Dr. Hassett made that cutting corporate tax rates increase tax revenues. Sounds a lot to me like tax cuts pay for themselves. I think tax reform is a worthy pursuit and very sensitive to the international arguments that are being made here today. But in some measure, didn't America get into trouble based upon that notion that tax cuts pay for themselves?
Certainly, the idea that tax cuts pay for themselves is very attractive politically, and it's very easy. For example, in the 1980s, that notion was very popular, the Laffer curve, and there are some dynamic aspects to the revenue estimates. But to think that tax cuts pay for themselves, except in very extraordinary circumstances, is mostly wishful thinking. If you look back at the 1986 Tax Reform Act, we lowered the rates and broadened the base. And immediately after the 86 Act, there was a whole set of hearings in the Senate Finance about where did the corporate revenue go. There was actually less corporate revenue collected than expected. So I think there should, and also if you follow the efforts of the Joint Committee and the Treasury Department, the official revenue estimators, I don't think they would ever score it that way.
Okay. Part of the problem then in some measure is the fact that we're fighting two wars and we've cut taxes by $2.3 trillion. And that's been a drain on the federal treasury. So in the course of this conversation, based upon what you've said, would you argue that tax cuts pay for themselves?
No, I would not, and certainly not. No, I would not argue that corporate tax cuts pay for themselves.
So that invites the next question as we go forward. How do we devise a system, as Mr. McDonald said, that perhaps can be revenue neutral and at the same time keep our companies competitive in a global economy? Mr. McDonald, do you want to weigh in on that as well?
Well, Congressman Neal, I think that is the challenge, and what we've said is let's prioritize getting to the competitive system and make sure we do it in a fiscally responsive way. I'm not sure it will be exactly revenue neutral, but let's do it in a fiscally responsible way.
And the last question to Mr. Olson, appreciate your good work. My time's running out quickly, but I do want to thank you for your parallel pursuit of my career, doing something about alternative minimum tax.
Thank you, sir.
Thank you, Mr. Chairman.
Thank you very much. Mr. Davis is recognized.
Thank you, Mr. Chairman. When we talk about international business and its reach and impact domestically, I'm harkened back to being deployed in the Middle East in the 82nd Airborne Division and taking a walk through the desert one night. Under the moonlight, a wrapper blew up to my feet, and it was an Arabic-labeled package or Pampers package. And I began to understand the reach of our economy. Mr. McDonald, you know, P&G has about 1,300 employees, 1,200 of whom live across the river in our district. That created $138 million in wages, and your company also purchased $160 million in goods from over 260 suppliers that are in our region in Kentucky. Those are real numbers. Those are real jobs that impact a lot of lives in a much broader supply chain. They're multiplied in the community. At a time when the economy is struggling to regain its footing, we look to job creators, small businesses, but also very much so large businesses like P&G as a means to put Americans back to work. Companies want to manufacture in the United States, currently faced with a tax and regulatory structure that encourages them to do otherwise. As you try to grow P&G and invest in Kentucky, Ohio, Indiana versus foreign markets, do you factor tax liability into your decisions? And if you do, how do you look more? Do you look more at the corporate marginal tax rate, your overall effective tax rate, and why?
We certainly do look at tax rate, Congressman Davis. Whenever we cite an operation anywhere in the world, we look at tax rate. But as I said earlier, because we do sell to 4 billion people a day around the world, we really have to invest everywhere. And normally what happens is when we invest in the United States, it becomes a decision of where to put the operation in the United States. Right now we're building a factory in Utah, in Box Elder, Utah. It's a $300 million investment. It will employ about 300 people. And we did that because it's a paper factory and we need to get our paper products more efficiently on the West Coast. One of the things that you see today going on, which is very different than it was in the 1980s, in the 1980s when I joined Procter & Gamble, the manufacturing expense of a product was more important than the logistics cost. But because of the cost of fuel today, and for other reasons, the logistics costs are much higher than the manufacturing expense. So it becomes much more difficult to produce a product in the United States, for example, particularly something as low value or as low cost as a diaper, and ship it somewhere overseas. But what we have in Cincinnati, what we have in Kentucky are high-paying technical jobs. Our research and development operations are there. Our corporate headquarters is there. And those really have a lot of very highly skilled people who are running our businesses around the world.
Do you have a sense, just in closing, when you create or open a new market or expand in an overseas market, what's the multiplier effect back home on jobs generally?
It can generally be anywhere from 6 to 10, depending upon the supply chain. We work very hard to develop suppliers who can be global suppliers for us. In fact, today we're recognized as one of the top companies in the United States for developing minority-owned suppliers. We'll take a minority-owned supplier and we will work to develop them into a global supplier. And today we do about $2 billion a year of business with minority-owned suppliers in the United States, many of them located in Kentucky or in Ohio.
Thank you.
Thank you very much. Mr. Reichert is recognized.
Thank you, Mr. Chairman. I want to thank Mr. Camp for holding this hearing. And I think all of us in this room all have recognized for many years that the tax code is complicated, an understatement. But I think that the testimony and the questions that we've heard today, the testimony from Ms. Olson saying it's a patchwork, it has no logical connections, it's confusion, and it creates mistrust. Mr. Hudak, it's onerous. I mean, these are words that all of you in the panel have used over and over again. So I hope that we can come together in a bipartisan way to begin to address some of these issues. And yesterday we had the opportunity to meet, some of us did, with Mr. Ballmer from Microsoft. And Mr. McDonald is saying some of the same things that you were saying about the corporate structure. But I think that one of the things that really struck me as he spoke to us yesterday was he urged us to think not just about a corporate tax rate, but a competitive tax system, as the point that all of you have been making today. And of course, one of our big concerns is, at least one of mine is, the small businesses. And so my question is for Mr. Hudak, is in what challenges does the amount of business income taxed at the individual level present for reforming the tax code in a way that helps American businesses grow and create jobs and compete?
Well, 70% of small businesses are pass-through companies, and they're taxed at the individual rate. So taxing anything beyond what a business owner is due as wages for his work is really taxing capital formation. It's really hitting on his ability to invest, create jobs. Certainly everybody should be subject to the full force of the employment taxes for the value of their work. But beyond that, because of the corporate structure of the small business, when you tax beyond that, you're really hitting on the small business owner's ability to form capital, dream dreams, invest, innovate, and that's a very important point.
I appreciate the answer, and I yield back. Thank you, Mr. Chairman.
Thank you. Mr. Doggett is recognized.
Thank you, Mr. Chairman. Let it be remembered that Congress began this debate on whether or not to reduce corporate tax revenues to pay for our national security on the same day that our committee leadership, like our president, is meeting with the Chinese. Because the first question that needs to be answered in this debate is how much more America will borrow from the Chinese so that some corporations can pay less. To say, as the representative of the Business Roundtable has done here, that, quote, revenue neutrality should be off the table may be consistent with the misguided holiday tax deal that added another $1 trillion almost to the national debt, but it is just another way of saying go borrow from the Chinese. Of course, there may well be some merit to lowering the statutory corporate tax rate. All of our witnesses are suggesting that there is. One should realize, of course, that to the extent that we lower the statutory rate, if all corporations were paying that, that would represent a substantial tax increase for many of our multinationals. You've noted General Electric, for one, that would be paying many times the effective rate if it paid the lowered statutory rate that's being proposed. To call for a pure territorial system is really just another way of saying we want a permanent repatriation of profits holiday like the one that didn't produce more jobs for Americans last time. And it is a surefire way to encourage the continued export of more American jobs. I would ask you, Dr. Sullivan, when we talk about competitiveness, which all of us are for, shouldn't we be concerned about promoting a level playing field so that our smaller American corporations, the ones that are the real engine for economic growth, who don't have subsidiaries in tax havens, whose lobbyists haven't come up here to this committee to add hundreds, if not thousands, of pages to the tax code and regulations that Chairman Camp showed at the beginning of this meeting, and to make it so complex, so that they have a level playing field and aren't at a disadvantage against their larger multinational competitors.
Yeah, thank you, Mr. Doggett. Yes, the most important thing that we can do to improve the competitiveness of our tax system is to make the tax system neutral across all types of companies. We need to look for pockets of over-subsidization, and that's what we find in certain areas of the international tax law. So we want a level playing field so that job creation can be uniform across the economy, particularly when our deficit problem is at these incredible levels.
Thank you. The gentleman's time has expired. Mr. Roscom is recognized.
Thank you, Mr. Chairman. Mr. McDonald, an observation and a question. The observation, I'm from suburban Chicago, and I'm sometimes kind of amazed at conversations I'll have with folks in the Chicagoland area who are working for worldwide American companies who have not had a sense of clarity about the fact that their very employment is dependent upon the success of that company in overseas markets. And So my statement is to you as the leadership of the Business Roundtable, I think that there's a lot of advocacy that is left on the table because businesses are somehow reluctant to engage in substantive philosophical conversations because they feel like they're going to be perceived as donkeys and elephants and get into partisan issues. When you're really talking about a worldview that says capital markets are good, competition is good, and I'm telling you, I am amazed at the level of conversation. So that's my observation.
I agree with you, Congressman.
Okay, glad to hear.
All of our members would agree. We have to do a better job.
Terrific. To amplify Mr. Teaberry's point, there has been, you know, the slogan, shipping jobs overseas is a bright and shiny bumper sticker, which is very, very catchy. And it seems like the more subtle but more robust argument is a 5-paragraph economics essay, which makes lots of sense, but you got to get through all 5 paragraphs. And if you do get through all 5 paragraphs, you go, oh, makes sense, I get it. But we who, and many on both sides of the aisle, we've done a very bad job of communicating overseas markets, their relationship to American prosperity. And I would just encourage you, we got very short time this morning, but just encourage you and want to be part of this conversation with you about how to communicate that more effectively to American citizens that understand and that need to understand prosperity overseas for U.S. companies means prosperity at home.
Absolutely, Congressman. In fact, I wanted to clear up a potentially misrepresentation of a territorial tax system. A territorial tax system, which I discussed earlier, says that we pay the same tax as a U.S. company in a foreign market that our competitors pay, that our foreign-based competitors pay. It's not a tax break. We're not talking about a tax break. What we're talking about is paying the same as our foreign-based competition. Our foreign-based competition doesn't have to pay tax, incremental tax, on a repatriation of funds to their home market. That's the difference. It's very simple.
Thank you,
sir.
Mr. Gerlach is recognized.
Following up on that point, Mr. McDonald, and also what Mr. Neal raised a few moments ago, from your perspective, given your domestic business activities as well as your foreign business activities, from the perspective of what it would take from a tax code change to have you consider investing more in domestic job creation rather than foreign job creation, would that then be just a general reduction in the corporate rate itself, tax rate, or should there be more specific targeted language for the repatriated dollars that we'd want to have you bring back to the United States and hopefully invest and not bring back, as you raised, Mr. Neal brought back, but not have any jobs created? So from your perspective, is a general tax rate reduction more favorable to you in that job creation here domestically, or language that would say if you brought those dollars back domestically, you would get a lower rate if you specifically invested that in R&D activities or manufacturing activities, something very specific and targeted that you would get that tax benefit by doing that? What, in your mind, would be the better way from a tax code standpoint to encourage you, Procter & Gamble, to invest more in the United States?
Congressman, our principle would be let's come up with a competitive system, and that would be both the rate and moving from a worldwide to a territorial system. And what I would suggest is let's benchmark the other countries that we're competing with, because we're also not just talking about American companies investing here, we're talking about Chinese companies. I've met with Chinese CEOs who say, help me figure out how to invest in the United States. And they're struggling with our tax code as well. And that's part of President Hu's visit, and the reason I'll need to leave too is because we're trying to get Chinese companies to invest here. And if we can get to a competitive system like those other OECD countries that have improved their systems, then I'm sure we will succeed.
Thank you.
Yes, sir.
Thank you, Chairman.
Thank you. Mr. Thompson is recognized.
Thank you, Mr. Chairman, and thank you for holding this hearing. I think it's an important discussion that we have to have. I think we need to simplify our tax codes, all the tax codes. And I'd like to just ask the chairman for his help and cooperation this year
on expanding that. I'm going to reintroduce my bill on estate tax reform. I think it's a sad day when family farms have to be sold in order to pay estate tax in those family farms, and hopefully we'll be able to create a situation where if you inherit the family farm, you keep farming it, you'll be able to get a postponement in any estate tax. So I hope we would expand it to that. I don't think the idea of a tax policy that encourages jobs in this country vis-a-vis overseas is a bumper sticker. We were passed out this sheet that shows the number of foreign jobs that were created between 1999 and 2008 versus domestic jobs that were lost. I think we need to have a tax code that in fact does encourage job growth here in the United States of America. And I understand that, that businesses consider all of their investments, foreign and domestic, and when they figure out their bottom line. But I think we have to pay particular attention to creating jobs here. And then lastly, and kind of a statement, but also a question, there's been a lot of talk about deficit neutrality when we work on reforming the tax code. I just don't think you can put that off the table or take care of it later on. I think this is a real important issue, not only because of the growing debt, but the impact it's going to have on companies like Procter & Gamble. There was discussion just this last year of lowering the U.S. credit rate, and because of our big deficit and our big debt. And I think that would impact U.S. competitiveness and U.S. corporate profits if that were to happen. So I don't think this is something that we can ignore. And I'd like to hear from both Dr. Sullivan and Mr. McDonald on that specific thing. How would that hurt U.S. companies, both here and abroad, if our credit rating was lowered because we don't pay attention to the deficit of our tax reform?
We need short answers.
Well, I think, Congressman Thompson, we've already seen somewhat the impact of that if we look at what's going on in Europe right now, in places like Greece, in places like Spain, places like Ireland. So we know what will happen. It'll be a higher interest rate. It'll be harder to get capital. The chart that you referenced, while a good chart, we have to get into the detail of that because the businesses and the economies are growing much faster in places like Asia and Africa than they are in places like Europe and the United States. So of course, in any time you have a global business, you're going to be hiring more people in those geographies. So I just think we need to get into the details and understand why those jobs were created abroad.
All right. The gentleman's time has expired, but Dr. Sullivan, if you'd just answer briefly. Thank you.
Thank you, Mr. Chairman. The deficit problems we face are unprecedented. They slowly weaken the foundations of our economy by sapping capital formation, and we risk a financial collapse. So these are very serious problems for our competitiveness.
Thank you. Mr. Heller is recognized.
Thank you, Mr. Chairman. I appreciate you having this hearing. I apologize that I missed some of what was said here this morning because I was on the radio, and the timing of it and the discussion had specifically to do with our tax structure and what's going on here in Washington, D.C. and what we're trying to do. And I told him that it's great that we're able to get the Republicans and Democrats together and actually start talking about some tax reform. Long overdue tax reform. And there isn't a small businessman or a manufacturer in my district that isn't talking about how complicated this tax form and the taxes are. We have 14.4% unemployment in Nevada, and I have to believe that our current tax structure has something to do with that. And I'm pleased to hear about the administration talking about their desire and eagerness to look at some tax reform. There are commissions out there. There are committees out there. leadership on both sides of the aisle, as we're seeing here in this committee meeting. But I think what we're missing and what is important to concentrate on is that it's the constituency out there, these small businesses and manufacturers that are talking about the need for fundamental change in our tax code so that they can be competitive not only here in this country but abroad. And we're hearing stories after stories, and I don't know if this was brought up, Microsoft talking about having to borrow in this country because they cannot bring money back from overseas. They have billions of dollars overseas. They can't bring it back to America to create jobs. Their only choice is to borrow because that's what's best for their shareholders. Those kind of stories, those kind of issues that we have right now are fundamentally flawed with the process that we have. So, Mr. Chairman, I certainly do appreciate this hearing. We talked about, I saw a couple of charts yesterday that's talking about deflation now here in this country. I know gasoline prices are going up. I know food prices are going up, but you get past those two obstacles that we start looking at deflation of other goods and services. We're looking at falling wage growth here in this country, and I believe that that has a lot to do with the codes that we have, the tax codes we have here in this country. And I guess quickly, and I don't know how much time I have left, but you talked about a simpler code, Ms. Olson. Have we gotten to the point that our code has run its course? Our current tax code has run its course, and is there alternatives out there to the current code as opposed to just making it simpler?
Well, as I said in my testimony, I really think you need to, on the individual side, really just put everything on the table and then go through it, not first from a cost benefit, but say, is this a policy that we should run through the Internal Revenue Code? First, is it a policy that we want? Second, is it a policy that we should run through the Internal Revenue Code? If it's a policy you want, then when you answer that second question, you have to think, what's the burden that you're putting on individual taxpayers to have to document this thing, to tie their businesses up into knots in order to meet the requirements for it? And then what are you making the IRS do? How are they going to treat taxpayers, whether they're businesses or individuals? Right now, you've just heard a morning of testimony about the difficulties that taxpayers are facing.
Yeah.
All right.
Thank you, Chairman.
Thank you. Dr. Price is recognized.
Thank you, Mr. Chairman, and I want to congratulate you on obtaining the gavel for this committee. I want to congratulate you and commend you for your passion for fundamental tax reform, which is so necessary. I frankly am struck by the unanimity of the panel, especially as it relates to the corporate tax rate and the need to decrease the corporate tax rate. I think it's imperative that we not punish the job creators, and I think as the charts have shown, a high corporate tax rate does in fact punish job creators because we live in a global economy. I was struck, however, Dr. Hassett, by comments about any decrease in corporate taxes not increasing revenue necessarily to the federal government. I wonder if you would comment about what many of us believe a decrease in corporate tax rates actually increases revenue to the federal government.
Thank you very much, Mr. Price, for the question, and Mr. Neal, welcome the response also to respond to the earlier exchange. The thing is that there's a well-developed literature, including a fairly recent Brookings paper, a paper by a German economist who's definitely not Republican or Democrat, that shows that really a lot of the lessons of Mr. Sullivan's testimony are apparent in the data, that if you're a high tax place, it's relatively easy for companies to move their profits to a low tax place. That's why you saw the lower average rates in Mr. Sullivan's testimony for some companies, is that they've been very adept at locating activity in lower tax places. If we reduce the tax here in the U.S., then they have less of an incentive to locate their profits and their activity abroad. And then it's just an empirical question, is the change in incentive enough so that you could actually reduce the rate and get more revenue? It's almost never the case with taxes, at least in the near term, that when you reduce the rate, you get more revenue. But in the corporate tax space, there are actually academic papers that find that result. I would say a rough reading of the literature is that the revenue maximizing tax rate in the corporate tax space is maybe around 30%. And so if we're above that, then it means we're actually losing revenue, and in part it's because it's so easy to transfer price to lower tax jurisdictions. And so that's why I put a reference in my testimony that inside that reference there.
Thanks. A quick comment as well on something else that has also been an area of disagreement, and that is the repatriation of dollars. It seems that our friends on the other side think that that would be a nasty thing to do, to allow that money to come back because they don't have any proof that there are jobs created. The converse of that is that if you just leave the money over there, then it actually is better for the United States. Isn't it better for American workers and our American economy to in some way allow for that repatriation of resources?
Right. We need to allow firms to put their money where it can be best put to use regardless of taxes, and repatriation shouldn't be relevant. I would counsel against a temporary measure. It should be a permanent measure.
All right.
Thank you. Thank you.
Thank you. Mr. Larson is recognized.
I want to thank the Chairman and thank him for this opportunity. I have three quick questions for the panelists. One for Mrs. Olson, if you would expound upon, in your testimony it said if tax compliance were an industry, it would be one of the largest in the United States. To consume 6 billion hours, the tax industry requires the equivalent of more than 3 million full-time workers. That's a pretty amazing statistic. I'd like you to expand upon that, noting that it seems to me that our current tax system is broken. It was antiquated in the last century. We're already a decade into this century, and we still haven't made much gains in terms of straightening it out. Second question to any of the panelists, with regard to transaction taxes, noted on 60 Minutes that more than $60 trillion takes place in transactions over the counter that are unregulated. And in terms of looking at revenue that it takes place in the ethosphere or done algorithmically or whatever the case may be, it just seems to me like this is an opportunity that is worth looking at as opposed to taxing one's labor. And so I'd be interested in answers to those questions. Ms. Olson, I'll go with you.
I think, what those numbers point out, and I must note that those numbers include business taxes as well as individual, but I urge this committee to not forget the individual taxpayers, the 132 million individual taxpayers who are your constituents, who are suffering under the current burden of this code. And as we talk about businesses making decisions about where to place their profits or their activities, that very ability to make those decisions leads to a great distrust of your constituents, of the Internal Revenue Code, and of government. And it leads to the sense that they are being discriminated against by the code and by their government because they cannot afford or do not have those kinds of breaks. So that was some of the things that we were trying to get across in our testimony. Others can go.
Over-the-counter transaction taxes, anyone? Dr. Sullivan, Dr. Hassan?
I do think it's important we reevaluate our tax code in light of the financial crisis to remove the elements of the code that contributed to it. For example, the deductibility of debt. However, a transactions tax has been tried in many countries around the world, and it's very hard to administer. And so I think its initial appeal wears off the more you look at it.
I concur with Dr. Sullivan.
And so there's no way to regulate an over-the-counter trade in a way that it produces $60 trillion of revenue? It just...
Unless we went to a multilateral where all countries agreed to do this, the trading activity, because it's so mobile, would shift to other countries. Sweden tried this several years ago, and other countries have tried it, and they had to repeal it because they just couldn't administer it effectively.
Thank you. The gentleman's time has expired. Mr. Buchanan is recognized.
Yeah, thank you, Mr. Chairman. Someone mentioned earlier, it's interesting, we're having a tax debate, and the President of China is in town at the same time. As someone that's been in business for himself for 35 years, I can tell you that it's not Florida, that I represent Sarasota in Florida, against Alabama and Mississippi competing for business. The fact of the matter that we're competing around the world, and one of our biggest competitors today, by far, the 800-pound gorilla in my mind, is China. I've done business overseas as well. So when I think about this and the fact that we haven't touched the tax code in a material way since '86, I think it's appropriate we have these discussions today because I always personally believe what makes America special and great is free enterprise. So let me jump over to Mr. McDonald quickly to you. When you talk in terms of business roundtable, the fact of the matter is, and I was a C corporation and moved to an S, and now I've got a bunch of LLCs that my family runs. But the bottom line is, half the tax revenue, I understand, is through pass-through entities. So when you look at lowering the tax rate or the discussion of tax rate for corporations, what are you going to do about all those employers that have 500, 100 employees, 50 employees that are LLCs? I hope that's got to be taken into consideration. You can't do one without the other, because otherwise you end up with a competitive advantage over someone else that happens to be a large family-run business. Could you comment on that quickly?
I agree with you, Congressman Buchanan.
Okay.
And you're right, it's about half.
Yeah. So what would you suggest? I mean, when you're looking and discussing around the business roundtable, hopefully, are you guys talking about C Corps, or are you looking at all the other entities, the LLCs and sub-S's and partnerships and everything else?
Well, as I suggested earlier, when my comments were about creating a competitive code for everyone, not just our members, which tend to be the larger corporations. But we realize that 50% or so are the smaller companies, and we think the code's got to be competitive for all of them.
Thank you. Mr. Hudak, let me just ask you quickly, when you look at, in terms of everybody talks about jobs, the fact of the matter, 70% of the jobs created in America are small, medium-sized businesses. In the state of Florida, Tallahassee, 99% of all companies registered in Tallahassee, whether they're LLCs or partnerships, are small, medium-sized businesses. What's the biggest one or two things, because you primarily work with small businesses, we can do or should consider to help small businesses in terms of cost and complexity? What do you think are the two biggest things we could do in terms of having an impact?
Simplification on all levels of the tax code. For instance, as a sole proprietor, just to take the home office deduction, it's a one-page form that refers to the instructions 13 times. Something you shouldn't do is like the 1099 provision. Right now, as a tax practitioner, I feel more like a paper pusher. I don't know who's going to collect all the W-9s to collect that information, but we don't have the staff to do it.
Thank you. I yield back.
Thank you. Mr. Schock is recognized.
Thank you, Mr. Chairman, and thank you once again for hosting this very important first hearing. Mr. McDonald, has your group studied approximately how much money among your member companies and companies at large could be repatriated if Congress does act to allow for either permanent or temporary repatriation at either zero or some small amount?
I don't have that number right now, Congressman, but we can get back to you with that number. We have chosen as a group to prioritize the whole discussion of getting to a competitive system and a system which is territorial rather than worldwide, which would allow for the repatriation, but we can get you that number.
Okay. And since that's your focus, what is the rate that you've decided would be necessary here in the United States that would not incentivize the sourcing of a multinational from a foreign source?
Right. We haven't chosen a single rate. Again, I think the exercise we all need to do together to be fiscally responsible is to look at those OECD countries that we're competing with and see what effective rate we would need in order to compete effectively with them. But we haven't chosen a number yet. We look forward to working with you to do that.
Yeah, I think this is a very important action that we can take sooner rather than later and doesn't have to be a part of the larger discussion of tax code simplification. I find it hard to believe some of my colleagues that think that if we repatriate this money, no jobs will be created. We met with a CEO of a large publicly traded company yesterday who estimated 30 to 40 billion just in that company alone that would be repatriated. I would have to think it would be in the trillions of dollars with all the companies, and that no jobs would be created here if that money came to our economy seems a bit crazy. Dr. Sullivan, in your estimation, your opinion, which seems to vary a little bit from the rest of our panel, do you have a number in mind in terms of what you think the corporate rate in America needs to be to decentivize foreign sourcing when the customer is of equal distance?
Thank you for the question. obviously we want the rate as low as possible. Let's talk about what realistically can happen. If we just do revenue neutral, based on Treasury estimates, if we just do revenue neutral corporate tax reform and get rid of most of the major incentives, we're talking about research credit, production credit, accelerated depreciation, we go full throttle, we'd be lucky to get down to 30% if we want to be revenue neutral. If we want to go below that,
but
we need to find other revenue sources.
Are you making the assumption that that the level of investment would remain static regardless of what the rate would be?
No, I'm not. I think investment would increase as a result of the lower rate.
And you stated earlier that obviously there's some risk reward based on that. So do you have a number in mind?
A number for
what the rate should be?
As low as possible.
0%?
Well, thank you. The gentleman's time has expired. Mr. Blumenauer is recognized.
Thank you, Mr. Chairman. And let me begin by expressing, as a number of our colleagues have, appreciation for your starting our deliberations dealing with the tax code. I think you've taken the right direction, and I will say the right tone. I have appreciated that and look forward to working with you on it, because this is clearly a unique opportunity. Part of the opportunity is just simply the value that is wasted, that you've documented, Ms. Olson. Part of our difficulty in having a productive conversation about the tax code is that it is so hopelessly complex that everybody's right. Every generalization, every complaint, right, left, center, they're right. They can find an example. I am a tax junkie. As a revenue committee chair and a state legislator eons ago, I went to law school and took tax classes because I wanted to learn more about the job. I could not do my taxes today under torture with weeks. And I'm not Warren Buffett. It is a scandal, and it's approaching a crisis point. The cost of compliance, the disconnection from tax provisions with what they were inclined to do, the alternative minimum tax, the tax on millionaires who evaded taxes, has morphed into a tax on the near rich who pay their taxes. And no billionaire hedge fund is ever touched by it. I hope, Mr. Chairman, that we'll be able to move forward with this with dispatch, because I think it is a symbol of whether or not government itself can respond to something that is universally agreed is in need of fixing, but whether we can follow that path. And in that connection, I guess I just have one question that I would offer to Ms. Olson, Mr. McDonald. Can we do this successfully if we disconnect the individual tax provisions from business, or do they need to be done concurrently?
Well, I think that although the business and the individual issue, they present different issues and different questions, but I do not think you can do them separately, in part because so many businesses are pass-through entities and you still have to deal with the individual side.
Mr. McDonald?
Yes, sir, I would agree with that as well. Many of those pass-through entities are suppliers of ours, and they're very critical to our business all over the world, so it has to be done together.
Great.
All right.
Thank you, Mr.
Thank
Chairman.
you. In an effort to continue everyone's opportunities, Mr. Rangel and I have had a discussion, and we're now going to move to 2 minutes per member. So with that, Mr. Lee is recognized.
Well, thank you, Mr. Chairman. In shortness of time, I will just make a brief statement, but really what I heard here today, and as a former businessman, what we hear with regard to the tax code does not bring a lot of confidence for businesses to want to invest in this country with all things being equal. With regards to labor, the cost of building a facility, when you have this differential in tax code, it is mind-boggling. And Ms. Olson talked about 6.1 billion hours with regards to compliance costs. The only area of this economy where I know we spent more time is debating health care. So that is a frightening number, because that is a cost that is an impediment on job growth in this country. Some of the recent statistics, Wall Street Journal just a few weeks ago, literally $2 trillion in liquid assets are sitting on the sideline, primarily because of the fault that we do not have enough certainty. Our tax code over the last decade, literally 10 years ago, there was only very few pieces of tax legislation that would be considered temporary, less than 12 to 18 months. Today, that number has grown exponentially, thereby, again, making decisions on long-term investment in capital. We want to attract the other multinationals to the United States. So we said the Fortune 500. We look now in the position of U.S. corporations. There are many other countries around the world. We want those jobs here. Unless we do something about our tax code and make it a priority, we won't see the significant job growth that all Americans, frankly, deserve to have. So appreciate you being here today and look forward to moving forward on this subject.
All right, thank you. Ms. Jenkins is recognized.
Thank you, Mr. Chairman, and thank you for holding the hearing. I think I join my colleagues in having a passion for this particular topic. In particular, I have a keen interest. I spent in my real life many years practicing public accounting in the tax side of things, and I recall the last time Congress discussed tax simplification was a wonderful time in my career because it was job security. And so every time Congress begins a discussion about job security, I think every CPA firm in the tax department holds a party that day. And so with that in mind, I know we don't have enough time. I could spend hours with you folks, but does anybody want to just try to prioritize for us, if you could change three things, what they might be, keeping in mind, I guess, priority would be job creation and economic growth. If anybody wants to tee that up. And then I'd just love to know your 2-second thoughts on flat tax, fair tax.
I would certainly prioritize, Congresswoman Jenkins, getting to a competitive tax system, because as you saw, we're uncompetitive with our foreign competition today.
I think that the main thing is the corporate rate just has to come down to make us more competitive, and so that's all three of my things.
Ms. Jenkins, what I would just add to that is this tax reform has to take into account our incredible deficit problems, which I don't think this Congress has fully come to grips with yet. Thank you.
All right, thank you. Thank you very much. Mr. Kind is recognized.
Thank you, Mr. Chairman. I want to thank you for holding this hearing, which I hope will be the beginning of many hearings that we have in this session. And one recommendation, Mr. Chairman, is perhaps getting the co-chairs of the Fiscal Commission, upon which you and others served, to testify with some of their recommendations as it affected the tax code and deficit reduction. But Ms. Olson, let me first start with you and thank you, for the work the National Taxpayer Advocate Group does and your recommendations that you submit to us from time to time. And I hope all of us do heed your admonition that we don't lose sight of the individual tax implications, because, and I think you're right, I think there's a sense of fundamental unfairness for average working families, individuals, small business owners who feel that unless they've got their team of accountants, team of tax lawyers, that they're not able to take advantage of the great complexity and the loopholes that do exist. And I think this does affect the compliance issue of tax filing and the underreporting and the cheating and the tax gap that has grown just given the complexity of this code. So as we move forward, I hope that we can marry the issues of corporate reduction along with the individual rate, which I think is going to be imperative. My guess is that most of the folks in the audience today are more focused on the corporate rate and what's going to happen there and not the individual rate. But back to what Mr. Hudick raised with us today in your testimony, in your written testimony, most of the businesses in this company are pass-through entities. They're not C-Corps, they're S, they're sole proprietors, they're partnerships. And that's why getting to the individual rate is going to be so important for most of the job growth that does occur in all of our individual districts, which are small business oriented, rather than the larger multinational businesses and the implication. But I also agree with the rest of your testimony that as we get into the corporate tax rate, this should be done through the prism of international competitiveness issues. in light of the changes that have happened with the tax code in other countries, and to make us as competitive as we need to be. But it's one of the reasons, back to you, Mr. Hudick, why I've had legislation, the S-Corp modernization bill, to try to simplify and make easier the compliance, and also to get at the built-in gains issue that we have to work on. So working with you and others, hopefully we'll have a chance to get into that. Thank you again, Mr. Chairman.
Thank you. Mr. Paulson is recognized.
Well, thank you, Mr. Chairman. And a lot of the conversation, I know whenever tax reform is brought up, it's around simplicity, fairness, the complex arguments that we heard about today. But I'm pleased that a lot of the conversation today obviously is about economic growth and competitiveness, without a doubt. And I'm wondering, maybe Mr. McDonald first, if you can just expand a little bit and talk a little bit about debt versus equity and the concept of how we encourage businesses and individuals to borrow and finance their operations through debt rather than through asset creation or capital formation, and why that is important, why we should be focused on that.
Well, I understand that Steve Ballmer was here yesterday talking about the amount of money that Microsoft has overseas, and obviously with that money overseas and the inability to repatriate it without paying more tax. Again, I want to again underscore the fact that we all pay tax in overseas markets. The difference with the United States and a very few countries that I showed on the chart was you have to pay an additional tax when you repatriate the money to your home country. There are very few countries in the world that do that. The United States is one. Causes him to have to borrow money here. At the Procter & Gamble company, we pay almost half of our profits in dividends. And most of our shareholders are our employees, are our retirees, are people in this room. They're not institutions. Less than half of our shareholders are institutions. We have to have that cash in order to pay those dividends. And it becomes a burden to create that cash when you have to pay a higher tax rate on that money coming back. You're, in a sense, taxing the shareholder, taxing the common person.
Thank you, Mr. Chairman.
Thank you. Mr. Berg is recognized.
Thank you, Mr. Chairman. This is my first hearing, and I can't think of a better topic. I am just tickled pink hearing all of the people that are presented, and you know, an issue like this is just so critical. I'm a small businessman. It's good to hear that my colleagues, both Republicans and Democrats, have the same frustration with their taxes as I do. And so again, I don't want to take any more time here, but just thank you for being here, and thank the chairman for holding this committee.
Thank you. Mr. Pasquarello is recognized.
Putting us together on this critical issue. Ms. Olson, it's always an honor and a pleasure to listen to you because you make sense. You are a true advocate. And I'm glad you brought up the subject of the average taxpayer because frequently, as has happened frequently, that person's forgotten. So while we are maybe trying to prioritize the cutting of corporate taxes, which I think is important, we need to address, and it will be addressed, you cannot, and I want to know if you disagree with me, you cannot address, for instance, that issue in a vacuum without talking about what the trials and tribulations are of folks who are making $25,000, $30,000, $35,000. Do you agree or disagree with me?
I absolutely agree.
Now, do you think then that systemic change is doable?
Yes, I think it is entirely possible, and it will take great courage and dedication. And I think you have to educate the public. We were talking about educating the public about businesses, but we need to educate the public about what they get as benefits through the code and what will happen if we get rid of some of those benefits but lower rates.
And educating the public is critical.
Absolutely.
And ourselves.
Absolutely.
Because take, for instance, and I don't make this a centerpiece, take, for instance, do you think most Americans know, and most of the folks, great folks that are on the panel with you, that federal, state, and local taxes, income taxes, consumed 9.2% of all personal income in 2009, which is the lowest rate since 1951?
Probably.
Yes or no?
No.
Do you think that's important in
Yes.
looking at this thing in context?
Absolutely.
Do we know what we're talking about on this side of the aisle? On this side of the barrier here, about taxes.
Do you know what you
Yeah. Thank you.
You're welcome.
The gentleman's time has expired. Ms. Black is recognized.
Thank you, Mr. Chairman, and likewise, as has already been said, this is certainly a very important topic. I know in consideration of the time, it may be that we won't be able to answer these two questions that I have, and perhaps more in writing, and I'm not sure that you will have an immediate answer to them. But Ms. Olson, for you, I'm looking at individuals. I'm curious as if we were to simplify the system, because you testify that people don't trust and they try to evade. Has there been any study done to show that if there were a more simplified system that we would perhaps collect more revenue because of so much evasion? And that would be one question that I would have.
I think it depends on how you structure the system. We know when people have withholding and the income is reported to the IRS, that 99% of the taxes, the income is reported, and so the taxes are paid on that income. When you don't have that kind of reporting and you have lots of opportunity to take deductions and claim special benefits, then that increases the opportunity to, avoid and underreport. And so if you structure the system right, you can minimize noncompliance. The more complexity you have in the system, the more opportunity you have to have noncompliance.
Thank you. Mr. Chairman, my understanding is that we are able to submit questions that then can be answered separately, and am I
Yes,
correct in that?
members are able to submit questions for the record, and if they do, I hope our panel will respond promptly.
Okay, thank you.
Thank you. And now Ms. Berkeley is recognized.
Thank you. I want to thank you, Mr. Chairman. I think this was a wonderful hearing, and I'm glad it's just the beginning of a process. I'd like to submit for the record my opening statement, which I wasn't able to make. I'm very glad, Ms. Olson, that you talked about that we need to do the individual reforms with the corporate reforms. In my family, when I was growing up, my father was a waiter in one of the Las Vegas hotels. The way we did our taxes is we waited for my Uncle Nady to come from New York once a year to do the taxes for us, and I don't think that's a good process for any American family, and I'm sure least of all my own. We just passed a massive tax package last month, and in it, it had all the tax extenders. Every one of them I supported, and I found that I had friends in the race car track world and the taxi companies that use propane gas. They kind of camped out in my office and explained how important all of these tax credits and tax breaks were to their business and how much they created jobs. Now, let me ask you something. If we actually lower the tax rates for corporations and companies throughout the United States, is that going to be enough? Are they going to be willing to give up all these individual tax credits and breaks that are in our tax code, or are they still going to be coming to me explaining how they still can't make ends meet, they're going to go under, and they need to have additional tax breaks? Because that's going to kill us when it comes to our deficit. There has to be revenue coming in somehow to support this country.
Can I make a point about that? I think that that goes to the need for education so that people understand that, that at least on average, maybe their bill won't increase. But on the other hand, I think it's very important that we will never get rid of everything. And so when you decide to put something in the Internal Revenue Code, you have to make sure that you all have the information to be able to evaluate.
And the witnesses can submit their answers
And let me
writing,
ask one other that I'm going to submit.
Your time has expired. And I
about
know
repatriation.
but Mr. McDermott and Mr. Levin would like to question. So Mr. McDermott is
Thank you.
recognized.
Thank you very much.
Thank you.
Thank you, Mr. Chairman. I ask unanimous consent to enter into the record an article by David K. Johnston called Johnston's Take, Reasons, Rules, and Riots, Our Societal Panic.
Without objection.
Talks about the history of taxation and that we established progressive taxation along the Greek lines because we realized the people at the top got most of the benefits, so they ought to pay most of the taxes. And the Republicans, when they took over the Congress last week, passed a rule which was got no ripple in the press. Nobody even mentions it. They said that if we cut taxes, we don't have to replace the money. It's not a loss to the budget. Now, I find it very hard when we've been operating under pay-go rules to think that we're going to do any kind of reduction in corporate taxation and not replace the money, unless this is simply a hearing on how do we cut spending? How do we cut investment in education, in higher education, in infrastructure? I'd like to hear from you, Mr. Sullivan. Do I understand correctly what that rule means?
If I understand what it means is that tax cuts do not have to be paid for, which I think is, again, in this fiscal environment, is absolutely outrageous, and it's dangerous to the long-term health of this economy.
So it's saying we're really going to make these tax cuts, and the only place we'll get the money is by borrowing it internationally to continue the level of services that we have in this country. Otherwise, we're going to reduce the level of services.
Obviously, the choice between whether it should be tax cuts, tax increases, or spending cuts is a political decision. But I think the rules should be neutral, and these rules are not neutral.
Thank you. I yield back the balance of my time.
Thank you. Mr. Levin is recognized.
We have to vote, but I just wanted to take the opportunity, Dr. Hassett. It isn't directly related. It was in your materials, or at least I saw them. You talked about the President's, his obsession with manufacturing and his policy of nationalizing GM and Chrysler. I don't think he has an obsession. I think manufacturing matters, and we have not nationalized GM and Chrysler. Well, let's talk about it some other time, but I want us to proceed on a rational, bipartisan basis. And when I saw your article, I just wanted to say to you, I think that is not accurate. There's no obsession, there's a concern, and there's no nationalization, sir. We've met with the CEOs, and the last thing they would say is that they've been nationalized. So go out and buy one of their cars.
If Dr. Hassett, if you wanted to comment, you don't need to, but
forward to having an exchange with Mr. Levin.
Absolutely. This hearing was really about the burdens of the federal tax system, the compliance, administrative problems, the difficulties for families, small businesses, the problems with creating economic growth under the current system, as well as the high corporate tax rate, the international tax system being increasingly out of step with the rest of the world. But I want to thank our witnesses for their testimony. The schedule has really been a difficult one this morning for us. Thank you for bearing with us through that. I just, again, members can submit questions to you, and I hope you will respond. And obviously, you've made it very clear that our code is a complex mess. It's frustrating to families, businesses big and small. It encourages inefficient behavior. These points were actually made in an opinion piece published today by the minority whip, Steny Hoyer. And while I don't necessarily subscribe to everything in that article, his comments about the need to act on a bipartisan basis to reform the tax code were right on point. And I look forward to continuing this dialogue at future hearings. But for now, the committee is adjourned.